Hey guys, how you doing? This is another live stream here on the Meet Damien channel, and we're gonna get right into the news for today, and that is that Bitcoin has broken the $70,000 level in what they're calling volatile trading. Uh, Bitcoin hit a new record to help end the week this Friday, uh, March 8th, 2024. Okay. The price of Bitcoin, it says that here in the CNBC article here that the price of Bitcoin jumped to a new record on Friday with the introduction of spot Bitcoin exchange traded funds in the US. Big crypto moves now tend to take place during traditional stock market trading hours. They're saying that here the cryptocurrency gave back some of its gains today and was last lower by more than 1%, where it was trading at $66,943, according to Coin Metrics. At one point, however, it rose as high as $70,000, $70,170, topping the previous record that it set on Tuesday earlier this week. Um, the up move in Bitcoin price began around the U.S. stock market trading open with the introduction of the spot Bitcoin exchange traded funds in the U.S. The big crypto moves now tend to take place like during the stock market trading hours. And we have a chart right here, guys, showing Bitcoin and what it's done just today alone. Okay, early in the morning, Bitcoin was trading about $67,000 per coin. Not much was happening until the stock market opened up around like 9:30 a.m. It started jumping up to like $68,000, and then it jumped up to $69,000 around 10 o'clock this morning, and finally hit $70,000 around 10 o'clock uh, in the morning Eastern Standard Time on the East Coast of the United States. But then it immediately dropped down in price, uh, basically trapping any bullish investors. Anybody who went long on Bitcoin at $70,000 immediately got punished because the price dropped down to about $66,000 around 11 a.m. On the East Coast for the United States. And some people might be saying to themselves, why? Why did Bitcoin just all of a sudden get rejected and drop down? There's many reasons why Bitcoin would do that. Some of those reasons would be is leverage longs, and I believe this article might explain what some of that leverage long is, but I'll just try to briefly describe it to myself. A lot of people in the Bitcoin markets are actually what they're doing is they're trading Bitcoin and they're using leverage to do it, like 10 to 1, 20 to 1, 50 to 1 leverage longs. And what ends up happening is you know, these leverage longs, they get wiped out if the price starts dropping, and they end up becoming what they call forced sellers, and they have to sell their Bitcoin immediately. Uh, and then what ends up happening is that people that put stop losses in at like $68,000 right over here, and they also put maybe a little stop loss at like $67,000. Those stop losses get activated on the exchanges, and those stop losses are basically they're basically instructions to tell the exchange to sell Bitcoin if it gets to that price, because they don't want to take any more losses. So those stop losses get activated and they send the price even lower, and then we end up getting down to about levels at like $66,000 before buyers start taking advantage of that opportunity to try and buy up Bitcoin again at like $66,000. Um, this is a lesson to be learned here. The lesson to be learned is do not take out leverage if you're going to be investing in Bitcoin. And if you are using stop losses, don't put your stop losses too tight, especially in a volatile market, a bull market that we have going on here in Bitcoin, because you might get stopped out, and then what ends up happening is you get stopped out here at like $67,000, and then the price starts immediately recovering like it is doing right now here at like 12 o'clock in the afternoon and 1 o'clock in the afternoon. We see Bitcoin trading right back again at $68,000. So there's a lot of frustrated investors and traders out there that basically got forced to sell their Bitcoin, or they protected themselves. They thought they were protecting themselves by putting their Bitcoin by selling their Bitcoin at $67 in case it goes down. And now they're forced. Now they have to buy back in again at like $68,000, possibly 69. We might go back up later on today to $69,000, guys, on the Bitcoin price. And this happened earlier this week as well. The leverage longs, they got wiped out, and it caused the forced selling, caused them to be forced to sell to cover their bad positions, and then the stop losses get triggered, and that sends Bitcoin even further down, and then short sellers try to pile in by short selling their Bitcoin before the price starts going back up again, with more bulls trying to take advantage of the dip. And all this is really doing is this is just causing the exchanges to make more money off of you guys, off of the leverage longs and off of the stop losses. So my advice to people who are buying and trading Bitcoin is don't do leverage longs. Don't trade on leverage, okay? Because you'll get wiped out. This is too crazy of a market to be doing that kind of stuff. Bitcoin is already a leverage bet in itself. You don't need to put leverage on top of leverage. And then on top of that, do not put your stop losses too tight. I mean, I know some people, this is not financial advice, but for most people who don't plan on selling their Bitcoin anytime soon, Bitcoin will go up in price between now and next year, as it's been doing in the last year, only because we have so many positive catalysts. We have the Bitcoin halving coming up, and then we also have a lot of demand coming from the Bitcoin ETFs. To put your stop losses tight, I mean, it's an art and a science in itself. But if you have stop losses on your Bitcoin, maybe try doing mental stop losses where you figure, if you see the price go down to like $66,000 and you bought at like $69,000, you will yourself sell the Bitcoin. You won't just have the computer just do it for you. A mental stop loss might help in these volatile markets here. And I just want to just move on to Ethereum here. There's an article here on Ethereum talking about a lot of excess optimism about Ethereum. And we will talk about that here, about, a lot of optimism in the market. Ethereum also did something crazy today, and it went up $4,000. Which is great for a lot of Ethereum investors, but it did not stay at that level too long either. It went down and hit that level, just like Bitcoin did, because there's a lot of derivatives and a lot of futures that are turning the market and creating it to be slightly overheated. Okay, I'm just going to read off this article word to word to understand what's going on out there in the cryptocurrency world and Ethereum trading out there. And they're saying here that the Ethereum bulls, okay, the Ethereum bulls are on a roll after the altcoin surged 13% in the last 7 days. So Ethereum investors they've been doing very well this week and this past month, reaching about a $3,900 level. Okay, is how high Ethereum got recently for the first time since December of 2021. They're saying that the current $456 billion market capitalization distances Ether from its competitors. However, excessive leverage is using Ethereum derivatives, posing a risk on the current bullish momentum. And then the article then asks the question, can Ether blast past $4,800 this cycle? And the reason why they use $4,800 is because Ethereum did actually go up to $4,800 back in 2021 was like the highest price it got up to. So we're just all curious if it's going to get up to that price again. I personally believe that it will get up to that price. And I think a lot of bullish Ethereum investors do so as well. But people are getting a little bit too excited. And we'll see why in this article. As I read off on this article, they say that the Ether bulls, they see a decent possibility of the current bull run culminating with a new all-time high, mirroring what Bitcoin experienced on March 5th earlier this week. But excessive optimism is posing a risk in terms of forced liquidations. And that's what I was saying earlier in this video, guys, is that these forced liquidations, these forced sellers, these people who bought Bitcoin at a high price who then use leverage are now being forced to sell their Bitcoin when the price goes down, and they get forced liquidated. Okay. To understand, this article continues on saying that to understand if $4,800 is a feasible target price for the cycle, one must first address the criticism and FUD that might be limiting Ether's upside. And there are some problems out there for Ether that are going on right now. Besides the usual interpretation that the Ethereum network is not scalable, which has been partially solved through the layer 2 solutions, some analysts cite that dependence on the Ethereum Foundation and a lack of regulatory clarity as reasons holding back Ether's bullish momentum. According to SEC Chairman Gary Gensler, the cryptocurrencies that allow holders to stake their positions could be interpreted as a security. And given that it looks very similar with some changes of labeling to lending, the spot Ethereum exchange traded fund decision on May 23rd could settle that debate. And analysts are estimating that about 50% to 70% odds of approval for that ETF. While part of the centralization criticism is valid, the number of developers entering the Ethereum ecosystem increased by 16,000 developers in 2023, almost 4 times more than what Solana, which is another cryptocurrency, was able to get. Therefore, it's becoming increasingly hard to deem that Ethereum's development is concentrated on a specific set of companies. Okay, so there is a little bit of decentralization going on with Ethereum. That it does have going for itself. Okay, but what is going on in the markets though? The Ether derivatives are signaling overconfidence. Okay. Essentially, the greatest short-term risk for Ether's price arises from overconfidence among traders that are using derivative instruments. The aggregate open interest of Ether futures surged to an all-time high on March 6, reaching about $13.4 billion, indicating a substantial demand for leverage. Okay, there's a lot of leverage longs out there that are basically suppressing the price of Ethereum, as well as these other cryptocurrencies. Okay. Even more concerning is the Ether futures premium, which measures the price of the monthly contracts against the levels that are traded on the spot exchanges, and that has been soaring to its highest point in over 18 months. Okay, and you can see this in this chart right here, what those leverage longs on Ethereum are looking like. Okay, these future premiums for the spot price on Ether, ETH. The Ether future premiums, they surpassed the 10% neutral threshold on February 12th, and they recently peaked at about 23%, indicating excessive demand for long positions. While this reflects confidence from professional traders following a 68% increase year to date in the price, it also elevates the risk of cascading liquidations due to intraday volatility. So, long story short, with all those fancy words, people are getting too excited about Ethereum, and they're getting too excited about crypto in general, and they're putting all these bets using futures and leverage longs, and they're getting blown out. They're blowing out their accounts right now, and causing other people to have to sell their crypto as well. So anyways, just going on in this article, the demand for the bullish leverage positions from retail traders has surged to its highest level in over 18 months. I feel like we already said that already, but they said that again in this article. The contracts, right? And this is very important here. The positive funding rate indicates increased demand for leverage longs, and the levels are exceeding 0.05%, equivalent to about 1% per week, which signals overconfidence in the market. And you can just look at this chart here, guys. Going back to like December of last year, this is what the chart normally looks like with the leverage longs. People getting excited. They got excited around Christmas time for crypto, and that caused prices to go down. Then there was a little bit of muted. There wasn't really that much excitement for Ether, and this is from Ethereum. There wasn't that much excitement for Ethereum back in January. It was very steady as she goes, very normal. But then, as we come into like February and going into March with this excessive green candle right here, we have all these traders and investors are betting long positions and betting the farm on Ethereum, and that is causing a lot of overconfidence, a lot of volatility, and it's causing the price to go up and down all over the place on most people. And is any of this warranted? Okay, this article believes none of this is warranted because the optimism is not warranted because Ether is not really performing on other metrics out there. Okay. And it says in the article that none of this would pose an issue if Ethereum network metrics signal strength, but the latest data has not been supportive of further Ether price appreciation. And the reason being is because over the past 30 days, Ethereum decentralized applications experienced a 6% decline in volume and 11% contraction in the number of active addresses. So there's actually less Ethereum addresses that are actually using Ethereum out there, guys. However, the price is going up, and why would the price go up? Okay, if nobody's really using Ethereum. Well, they're saying it's because everybody's getting excited about a potential Ethereum ETF, exchange traded fund. And that's supposed to be coming out sometime in May. Okay. But there's no guarantee. There is no guarantee. If you talk to SEC Chairman Gary Gensler, he's been against having exchange traded funds, even though they approved one in January for Bitcoin. He's still skeptical, and he basically did it against his own will, if you ask me. Because they would have sued him, and they would have sued the SEC if they didn't do an exchange traded fund for Ethereum. Okay. I'll just continue reading on this article here. Ultimately, one could attribute the recent bullishness in Ether price to a potential spot ETF, which I already mentioned. However, the excessive leverage from both retail and professional traders, more than 12 weeks ahead on the decision date, cast doubt on the sustainability of a surge above $4,800 for Ethereum. And that's pretty much the sum of what's going on in the markets there for Bitcoin and Ethereum, which is also affecting the other cryptocurrencies like Solana and Avalanche and Injective and other cryptocurrencies that are out there. I kind of want to go quickly into the charts here on TradingView. And we can see this is Ethereum's price here because we were just talking about Ethereum. And this is Ethereum on a daily chart using Coinbase. You can see Ethereum on the daily chart has been basically we've been going up in price, plain and simple. We've been up as we were as low as like 2,000, 3,000, about $2,800 back in February 18th. Okay. But now we're currently sitting at like $3,900 on the Ethereum price here. And I'm going to zoom in on the charts here. I'm going to zoom in onto the 1 hour chart to see that volatility that we've been experiencing. And yeah. So this is what we saw earlier today. Okay. This is like the Friday morning hours. Ethereum is trading around about $3,800, and then the stock market opens up, and we see Ethereum go up as high as $4,000, and literally it hits that number, doesn't go any higher than that, immediately crashes down, goes down to $3,800 that same hour, and then we continue on, and we go down as low as about 3,800, low $3,800 level. So Ethereum didn't really see that much of a crash, if you ask me. And now, after those leverage longs got blown out, and those stop losses got hunted out by the by the exchanges, looks like we are making a fair recovery here, with Ethereum trading back up to about $3,900. Okay, but it got a little bit more excessive if you look at the Bitcoin chart here, and we'll go into that real quick here before I end this live stream here, and you guys can see that in the early morning Friday hours that Bitcoin was trading about $67,000, and then around 10 o'clock East Coast time in the United States, we got as high as $70,000, $70,199 on Coinbase. Okay. And then immediately we sold down, got down to, on the next hour, we got down as low as $66,157. But looks like we're making a nice steady recovery here on Ethereum, and now on Bitcoin, and now Bitcoin is now trading at $68,600. And like I said, guys, it looks like the leverage longs, they don't learn their lesson, because we had the same kind of craziness going on back on Tuesday when Bitcoin got up to $69,000. It got up as high as $69,300, and then immediately sold off in the following hours, as you can see. And we got down to as low as $59,224. Okay. After those stop losses got blown out, after those leverage longs got blown out, after the short sellers took advantage of the situation, but then the ETFs, the Bitcoin ETFs came in and they bought up that Bitcoin, and so did all these other investors that have been waiting on the sideline looking for like low prices on Bitcoin. And we started immediately going back up again, trading up to about $66,000, $67,000 on Bitcoin. So I guess some people need to learn their lessons. They don't learn their lessons, and then they get punished. And then, but we are still on an upward bullish market for Bitcoin, and it's only going to be more good news for investors here. If you guys like this video, please go ahead and click that like button. If you haven't subscribed, go ahead and smash that subscribe button. Okay, I plan on doing more videos like this and keeping you guys updated. Look for me on the live streams here. If you click the notification, the bell button, you guys will get notified when I will go live, and we get a chance to talk about crypto here. Okay, and yeah, I look forward to doing more videos like this, guys. And this has just been us talking about Bitcoin and Ethereum and what's been going on out there. I'm going to go ahead and end this live stream. I look forward to doing more videos like this on the Meet Damien channel. Take care, guys.